Hello and welcome to Pro Trader Strategies market commentary for Thursday, December the 5th. My name's Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media. I'm here to not only talk about the economic data and how that impacts our markets, but how we can take advantage of that by using options in our portfolio. I'm actually starting a whole new course where we are going to be talking about implementation of options into a regular portfolio where we have stocks and bonds and things of that nature already involved there. So we're going to talk about managing that risk, kind of like what I've been doing, building my own portfolio here, using options and things of that nature in and around stocks that I own, trying to lower my basis and moving on with that. All right, without further ado, please remember past performance of any trading system or methodology is not necessarily indicative of future results. And let's talk about the economic data. We got across the pond German factory orders coming in quite a bit lower than what was expected at negative 0.4%. It was expected to be a positive 0.3%, albeit they did revise last month's number up slightly from 1.3% to 1.5%. Then we move over here. Actually, one other thing was European retail sales coming in lower than expected at negative 0.6%, expected to be negative 0.4%, and they revised last month's number down from a positive 0.1 to a negative 0.2. So not what we really want to see there. European GDP coming in at 0.2%. In line with expectations there. We got our challenger job cuts year over year coming in at negative 16%, which is actually not too shabby, really, to be quite honest. We'd like to see that being positive or, not really having any job cuts coming into a holiday season. But we are seeing some of the other economic data points looking pretty good along the employment front as well, ahead of tomorrow's big economic data point, which is the non-farm payroll. But we did get back unemployment claims coming in at 203,000, expected to be 205,000. That is lower than what was expected at 215,000, so that's a good thing. Then we got factory orders here in the United States, which is basically a revision or an update on the durable goods numbers. That came in line with expectations at 0.3%. And last month's number revised down slightly from negative 0.6 to negative 0.8. Now remember, that's a fresher look, non-durable goods. Sorry, I got dogs in the background fighting, and I'm ready to lay into them. Anyway, so it's a leading indicator on production, and that is durable goods comes out a little bit earlier. Sorry, natural gas storages, negative 19 billion, expected to be negative 22 billion. So a slight build there on that front. All right, let's talk about the overall markets. We've got crude oil moving higher, something to talk about with crude oil moving higher here today, testing that $59 a barrel. There is OPEC meetings going on in Vienna. Everybody's hanging out in the stairwell. Well, if you don't know a whole lot about that, well, what happens when people try to meet and talk? I guess they meet in a stairwell over there. So that's going on. The real consensus is they are probably going to pull back on some of their cuts, which would increase some of the supply coming out on the markets. That would cause weakness in crude oil. If we see that happen, there's not a whole lot of scenarios to really drive crude oil higher. I think they mostly want to cut on those rates. And then we go over to gold futures, and we're seeing a little bit of positive move here in gold. That's more of a flight to safety as we're seeing weakness, and at sometimes a mixed bag in these equities as well. But we're seeing more weakness in the markets as the day progresses here. That's going to cause gold futures to move a little bit higher, despite the fact that yesterday we did get this doji that really kind of looks pretty bearish when we pull it up. You probably already noticed it right here, but this doji right there at the top of a move, that signaling a little bit of bearishness, especially because we've got the value area high here. That's going to slow down momentum, generally speaking. But because we have the point of control so far down here, and this value area is really representation of the value between the value area high and the value area low, that is 70% of the volume. But we are seeing, as we continue to trade, a volume spike right up here in and around 1500. That's more of a psychological level. It's also lining up with the value area high, but the bulls want to get it above there, and I think they're going to build out this volume node in and around just above 1500. As we're seeing the dollar weaken, we're seeing the British pound actually start to gain strength here against the US dollar. That is going to be somewhat of a flight to safety as well, not only with regards to the equities showing weakness. So keep your eyes on that. I think that we're going to see continuing strength in gold. Bonds coming off again today by 19 ticks. We breached that value area high again, which is lined up perfectly with that 160 handle. You can see we're basically 2 points away from that 160 handle. I believe that that is the sweet spot for bonds. It looks like to me that the rate cut may still be in the docket for the early part of 2020. I don't think we're going to see that here coming up relatively soon with the FOMC meeting, but I do believe that there may be a significant chance of a rate cut here in the near future. All right, being within the next 6 months. All right, we've got VIX coming off, or actually it's a little bit positive now. It was a little bit lower earlier today, but VIX is starting to move up, and that would be expected with the Dow Jones down on the day and the equities showing some weakness as well. We've got the Dow Jones only off by about 40 points right now. The NASDAQ off by about 8 ticks after yesterday was one of the first days we've seen positive moves in the NASDAQ, but kind of finding a little bit of a bottom here. One thing to note, though, that I forgot to mention yesterday, we are below this. This is the 9-day moving average, and that is showing short-term weakness. So whether or not we start rolling back over down into the value area, which lines up here, the value area high again, that is where the market has seen the most volume in time where price has been accepted, right? Well, that means that the point of control here is going to act as a bit of a magnet, kind of drawing the market back down. So the market wants to be pulled back down towards the point of control anytime we get a little overextended. We are building up some time and volume up here, which is gaining acceptance, being supported in and around that 81.65 area, which we came down and tested on Tuesday, bounced up and away from that. But we're still not above that 9-day moving average, which is still showing short-term weakness going forward here. Then we move over to the E-mini S&Ps, and we can see that we are just slightly in negative territory, but again below that 9-day moving average, which is short-term weakness in the markets. You know, there's people basically coming out and saying we're about 5% overvalued and a correction is due in the market. So, you know, that is in line with my thesis that we should come back down and test some of these key levels like the 3,000 in the E-mini S&Ps. That would not even be that 5% correction necessarily. A little bit lower than that would be, but a test of that 3,000 would actually be good for the market at this point in time. There we go in positive. That's with the mixed bag where we're seeing negative in some equities and negative equity indexes and positive indexes. So that's what I was talking about there. I haven't added anything to my portfolio or taken anything off at this point. I'm on a wait and see kind of thing. We're also doing this new webinar on implementation of options into our portfolio. So I'm saving some of my dry powder for those types of strategies where we're going to be using synthetic long, synthetic shorts to create a nice portfolio. It's great for the newer trader that is getting into options, that is used to trading stocks and wants to build a portfolio, but maybe even has a smaller portfolio value and is not really able to create a diverse portfolio. Well, using options, we can build a much better diversified portfolio than if we were just going out and buying stock. And I'll show you how that all works out in today's webinar, so check it out. Go to protraderstrategies.com. That's all I got for you, other than if you can't take that, take it easy.